Hello viewers, it's been a while since I've done an oil review and it looks like things could be bubbling up there for WTI at the moment. We could be seeing prices possibly pushing back towards the 100 mark. Lots of fundamentals and technical and sentiment indicators all supporting a more bullish outlook for oil at the moment. So in this video I'm going to cover off most of those and see where they could be heading next. So let's get into it. So first up, some basic fundamentals. We're going to look at the Baker Hughes rig count, a good proxy for the overall energy oil sector in terms of action and what's been going on. Like to use the US number there, and actually at the moment the change from last year is negative 125. Normally a bearish indicator there. Change from prior count though, a bit more positive, +7. So something to keep an eye on in terms of those numbers. But at the moment, you would probably call that weak bearish. Now inventories are something else that traders and investors all look at. For me, it's more about the outliers, big unexpected moves to maybe drive the price in a certain direction. At the moment, looking pretty stable, nothing much to talk about. Last week, better than expected, minus 1.536 million barrels against the forecast 0.9. Forecast for this week, minus 0.025 million. So look for any outliers when that comes out, March 20th. But at the moment, nothing really to take away from there. But before we get into the sentiment and technical analysis, what other fundamentals are driving the possibility of a more bullish WTI crude oil price? Well, at the moment we're seeing a lot stronger Chinese demand. The Ukrainian Russian conflict, the recent drone attacks on the Russian refineries, obviously sparking off interest there. We got the Israel Hamas conflict sort of giving an underlying feel of keeping the price at these highs, and we've also got the Houthis there attacking shipping and also keeping it at that sort of high level. General demand though still pretty good. Also saw the crude oil crack spread at 6-month highs, which is a bullish sign, and floating storage falling, which is also bullish. And we've got OPEC plus unchanged and still looking to extend those crude oil production cuts. So generally it's got a feel of quite a bullish outlook for oil. So let's head into how oil's been performing against its peers in the commodities world. And as you can see there, up the top, there's only one real huge winner this year, and that is cocoa, up nearly 100% since the start of 24. You can see oil smack bang in the middle there. What's it up? It's up about nearly 15%. Bottom of the pile, nat gas down just over 30%. So in terms of performance, it's not had a bad 2024 so far. And if we look at what's been going on this morning over here in the UK time and late last night, what can we see? Well, we had that nice run up there to new recent highs around $82.50. This morning it's been quietish, but just starting to pick up again. Indicators at the bottom here all pointing positive. Get into some background information that I look at when I'm trying to put together these forecasts. We've got volatility here, the CBOE volatility index, OVX. At the moment it's coming down, so to me that is a sign that we've got stability in the direction the price wants to be heading, looking more bullish. Once it starts jumping, as you can see above here, that's when I start to get a bit more bearish on the price. What else we got? This index of relevant currencies that trade oil, very focused in on the oil market at the moment. If it's below, as you can see there, looking for bullish indications again, similar to the OVX. When it pops up that way, it's a bit more bearish. And commitment of traders data and seasonality. Start with seasonality at the bottom. This time of year, as you can see, it's normally bearish. Then if we head on to the left, by sort of the latter part of March, it does start to pick up, but it's a bumpy ride, as you can see there. So that's, you know, historical seasonality in terms of price. You know, you can see there that really nice strong trend coming in, but that's not until sort of December time. Now, interesting, above that are the commitment of traders details. Now, this gives us an idea of what the users, the players of oil, are up to. These results published every Friday by the CFTC, and we can see the large commercials have actually been increasing, and the large speculators are actually down at these low levels. What I would expect to see if we got a bullish environment is actually the large speculators on the up and the large commercials on the down, because we can see the price moving up there at the top, but actually, you know, it's a negative divergence there. So I'll be looking quite strongly this Friday to see if there's any positive pickup there in, you know, position building. But at the moment, I'd say the COT data is probably neutralised by you know, this divergence and the price moving up, and the seasonality at the bottom. We're sort of down at the bottom of that historical spike, you know, looking to more flat, so I'll call it neutral there as well. So you can also see the price action in between those two red lines that are drawn on there. It's about $68 to $83. We can see back there historically as well, the price has been playing around those lows. We've had that nice trend up. It's got a break on up through there to get exciting, but it has been, you could call it range bound, other than that period smack bang in October time of last year, sort of ranging in that zone. What else? Well, let's have a look at a longer term chart here. We got the weekly price action. What can we take away from this? It's a similar story to the daily, actually, that you can see that we got volume here at price key level around about $60, where a lot of the action's happening. So you could see that as a sort of support area in terms of price action. What else could we do? Let's get the Fibonacci's. I'm not going to take it from that low because that's an outlier. Let's try and go from the high there to the close of that one. We're going to have to colour that in because I've got it set to white. Let's quickly go through those, but you can see that, you know, the price has been picking up, you know, over the longer term, just quietly doing its stuff behind the scenes. A lot of those fundamental variables that I just talked about building up the pressure there to the upside, so it'd be difficult to bet on the short side at the moment for oil because of those fundamentals. Anything could kick off on any of those conflicts and send the price up quite high. We got the Fibonacci's on there now. What's the takeaway? Well, in terms of upsides, that $100, it's not that far away, you know. 103, the next upside there, and then back to those highs, 113. If it can break through there, yeah, $164, that would be an amazing number to get to. But like I said, that high there back in Feb 22, around $130, would have to be broken there first. But more realistically, you know, $103 not out of the question. So let's head into the Renko charts to focus in on the sort of medium shorter term price action. And here we've got a Renko chart set with a $1 block size. It started at the bottom, just turning bullish there on the modified DMI. Stochastic also bullish. In terms of price action, we're above the Bollinger Band there, that yellow setup breakout there, so we're bullish there. Heading to this Fibonacci line, about $83. Looks like it could prove, you know, some sort of head-butting ceiling to the price there. We've got a bit of price action around there historically. Can break through there, then we're looking at about $94.5 last seen September of last year. And if we can break through there, again, it's that early hundreds, 106 and 112. If we focus in even shorter term, got a faster block size, 25 cents. Looking a bit more bullish there on the modified DMI. Stochastic just heading back but still bullish. You can see the recent push up from mid-March. Nice gain there, just hitting that highs, $82.50. Would be looking for 84, 85 maybe in the shorter term. In terms of support numbers, back down to where we got all this price action, $81. Then follow those Fibonacci's down, $80 and then 78, and then back to the lows of around 75, 76 dollars. So we've gone through all the analysis. Let me summarize this up for you in a simple table, and we'll come out with the forecast for where we think it's heading next. So let's start the summary then for crude oil. I'm going to go bullish, mainly based on those really strong fundamentals backed by ever improving technicals. We start in the top right there. We've got seasonality, cot inventories pretty neutral. Going to wait for Friday to see that cot impact, see if that improves things again. Rig count, we saw in the shorter term starting to improve, but overall maybe weak, bearish. Like I say, fundamentals, volatility, currency strength, all bullish. Then we head into the short term, medium term. Renko, short term definitely bullish, medium term a bit more of a mixed bag, but certainly improving, looking to break up through the next level to take us stronger in that up direction. In terms of targets, good risk return on the upside, 4.59 to 1. In the longer term, 2.14 to 1. So like I say, good risk reward there with some potential numbers to monitor in terms of targets and stop levels. To the downside, also not bad either really. 2 and 2.38 to 1. Overall though, I'm sticking with a bullish opinion for crude oil. So there you go. Crude oil bulls might be pulling that price up to the mid 90s to $100 mark over the next few weeks and months. Interesting to watch that develop. A lot of fundamentals there supporting that bullish price action, and some triggers that could easily jerk that price off up to the higher 90s, 100 sort of area. Let me know what you think in the comments below, where you think the price of oil is heading next. I'd like to hear your thoughts there. And if you liked today's video, please give us a thumbs up. Don't forget to hit the subscribe and bell buttons to receive future notification of content I produce like this and all the other stuff that I produce on the channel. Now, if you want to learn more about, say, the Renko charts that I've been using in this video, I'm going to put a playlist at the end of this video that you can follow. Work your way from top to bottom and you'll become a master of the Renko charts. Also, please do explore the rest of the channel. There's a free course there, take you from hero to zero in the world of trading, if you want to get into that as well. Actually, I'll throw that link in at the end of this video as well, and those two links coming up right now.